Hi, I'm Lou from Dividend Dog. Thank you for watching the channel. So here we talk about stocks with an emphasis on dividends paying stocks. So if that's your kind of thing, please like and consider subscribing. So today we're going to talk about Hormel Foods. Hormel is a company. It's widely known as a company for basically meat, especially ham and pork. Over the years, they've expanded though to the point where it's more today, as it stands, more of a big food conglomerate. They have brands like Hormel, obviously, but Spam, Skppy, and a whole bunch of other ones. And it's a dividends king because it's raised its dividends each and every year for over 50 years. So we're going to talk about Hormel. So let's look at the history of Hormel Foods. Back in 1891, it was started as the George A. Hormel and Company by the man George A. Hormel. 1926, they invented ham in a can. That was the first time anyone had ever put ham in a can. 1928, the George A. Hormel and Company becomes a public company by selling shares to the public. In the period of 1935 to 1941, it introduced Dinty Moore's beef stew, Hormel chili, and Spam. 1941, the Hormel Foundation was created. Remember that because we'll talk more about the Hormel Foundation. 1942, Hormel Institutes was started. 1959 to 1963, they introduced the Hormel Little Sizzlers pork sausages, Hormel Cure 81 hams, and Spam produced their billionth can. 1990, Hormel shares moves to the New York Stock Exchange. In 1993, the name was changed from the George A. Hormel and Company to the present Hormel Foods Corporation. 2000 to 2013, Hormel makes more than 10 acquisitions. It brings in Skppy peanut butter, Muscle Milk, which they eventually sold, and Applegate Farms. 2016, they opened the new Spam Museum in their hometown of Austin, Minnesota. And in 2021, they acquired the nut businesses Planters and Corn Nuts. So let's look at the financials here. So as we look at how they've been doing, they show how they operate in these different divisions, but looking at the company as a whole, we can see that the earnings per share have slipped a bit, but they look to recently be bouncing back. I think in general, this company, I think it's mostly been slow and steady progress over the years with growing their earnings along with growing their dividends. If we look at how the ratings, the value line gives them a financial strength of A+. Morningstar gives it a narrow moat with a stable trend, and they value their shares at $37.50. Moody's gives them an A1 rating with a stable outlook. That's March 15th of 2022. And S&P gives them an A rating, a single A rating with a negative outlook. That's back in February 22nd of 2002. So, and you can see, how they obviously come down to all these different things they're doing. They started with them being meat-centric. They've expanded beyond that to other proteins, and now, with their Planters acquisition that they bought from Kraft, they're going into more of the snack business. So they've been expanding. They've been taking on more debt to do that. And their history, for the most part, is that they don't take too many crazy risks here. That they take this measured approach to growing. Looking at the insider trading, insider ownership, insider trading over the last 2 years, I only really see one insider. It was a senior vice president. He bought about $300,000 worth of stock. That was 2 years ago. He paid $46.97. There have been a few sales in the few $100,000 category. Mostly it's just options being exercised and sold. So there's not so much really to look at there. The insider ownership is where it gets a little more interesting. The Hormel Foundation, which we already talked about when that was created, the Hormel Foundation reports beneficial ownership of over 256 million shares. That's 47.26% of the stock. Note that the foundation only directly owns 28.7 million shares. The other 227.7 million shares is a trustee of various trusts. Basically, the foundation votes the shares held in these trusts and has a quote-unquote remainder interest in all of the shares held in the trust. So the foundation was converted from a private foundation to a public foundation back in 1980. A lot of charities and nonprofits that are supported by the trust have a representation on the board of the foundation. On the trust website, it states, quote, the Hormel Foundation's contributions are a direct result from the dividend increases of Hormel Foods common stock, the foundation's main asset. So it sounds like a good imperative for Hormel's management to always try to keep raising that dividend. Back in 2016, the chair of the Hormel Foundation wrote in part, "We marked 75 years of success. We plan to keep doing what we've been doing, serve as a force to keep Hormel independent." So I read that pretty clearly, that Hormel as a company is not for sale. Don't buy into it thinking that some other bigger company is going to come and scoop them up. It's just not going to happen. This Hormel Foundation has, the lion's share of the shares, and they've been, it's going to be independent. It's been like that since day one, and it's probably going to be like that for another 75 years. So looking at Hormel, let's look at some of the pros here. I think the biggest pro is the dividend increases. If we look at this here, they have a streak for over 50 years. They're growing the dividend each and every year. They're one of very few companies out there can match that record of performance. And clearly the largest shareholder, the Hormel Foundation, they have a vested interest in keeping that streak going. So I think that's a good thing overall. That's what the foundation wants, and what the foundation wants is gonna be the imperative. They list here about Hormel Foods themselves list, quote unquote, increasing the dividend as the first line under the required category of their capital allocation, alongside their boasting 56 consecutive years of dividend increases. So clearly they are proud of this accomplishment, and as they should be. Another pro is that only about 8% of their sales are from outside the United States. So I can see a long runway here that they have to go to, maybe something like Spam, their new Planters nut business, or the peanut butter business. I can see those maybe having legs going out into all these foreign markets, but right now it's very much a U.S.-centered company. As far as the cons and the risks, I don't see much risk here. I think probably the biggest risk may be the share price itself. Overpaying for performance can hurt your performance. Remember Morningstar, they believes that fair value is $37.50 per share. That's significantly lower than the $48.66 that it trades for now. I think there's a risk on taking on more debt to buy planters. I guess there's always a risk that people might eat less meat. I think that's somewhat mitigated by, they've really grown away from just being a meat company. I mean, I know even as a shareholder, I think of them still as a meat company, but it's much, much more than that nowadays. So the summary here, I think that, I own stock in Hormel. I think it's a great company. It's one of my favorite food companies to invest in. My cost basis is zero. I've owned it for many, many years, and I've sold enough over the years to get my initial investment money back. But would I buy more? Well, I would, but not at today's prices. I think that, obviously if the price goes down and it gets cheaper to less than $40, then I would take a look at adding to my position. But, this is not financial advice. This is just my honest opinion. But I think that's the truth on Hormel Foods. Please leave your comments and opinions. Thank you for watching.